Thank you very much. Well, breaking news, gold settling at a new record, $1,258.30. That's up $9.60. It may, after hours, go even higher than that. We have a trio of 49ers that they're ready to weigh in on this. But first, let's get a check on how stocks and other commodities are faring. Phil Flynn is in the Chicago Trading Pits with all the action on commodities. But let's start with Nicole Petalides on the floor of the NYSE. Nicole, with us. We want to come back to you. We want to turn our focus to gold's record run, but we're going to come back to all commodities. Gold settling at a record $1,258.30. That's up $9.60. Let's bring into the discussion Euro Pacific Capital's Andrew Schiff. He is also author of the new book, How an Economy Grows and Why It Crashes. But let's start with our own Sandra Smith as we focus on the trade element to these commodities.
Right. So I want to point out with this record close today, we're up 14% this year, 34% gain over the past year. The reasons Phil mentioned them, the U.S. dollar, gold's being used as an alternative investment right now. The safe haven trade is coming back. People are just looking for a place to park their money where they think it'll store value and it'll be there when they go back to it later. But the whole point is, how do you take this opportunity to make money? What's the trade today? JP Morgan just put a buy rating on. They're saying don't focus on gold futures right now because of the record that we see day after day there. They're looking at the fact that gold stocks have more to run here. So we've got some of those for you that they picked as buys. Barrick Gold, Goldcorp, Kinross Gold. These are all the gold mining companies that they should gain as gold continues to make records. And as you can see on the heel of this big trade in gold today, they're gaining big time, up about 3% across the board. They say even at these levels, because the gold miners have had big gains, we'd encourage investors who have not entered the gold sector to open a starter position. So they're all about it. The other thing, though, and I have to give you the other side to every trade, sure, right, David? UBS, and I'm not citing analysts here, some UBS traders that are looking at gold are saying the only conflict they have with gold continuing these highs is the fact that the gold ETF, the GLD, which has seen record volume, record participation there, their problem is that because we've seen so much participation there, that if that doesn't continue, because remember, the gold GLD, the gold ETF, actually holds gold.
You know, I actually have the number.
The price
they
of gold
hold
higher.
1,307 metric tons
a record
of gold.
Yes.
Where do they keep it?
Well, you could actually.
If we had the answer to that, maybe some goldfinger out there would try to nuke it.
There's a lot of theories about the fact of whether or not they actually hold what they say they do.
What do you think?
A lot of them, sound kooky. But if people want to own ETFs, gold ETFs, there are more than just the GLD. There's plenty of smaller, lesser-known ETFs.
I don't know where it's kept first.
Well, they say they have a facility, and I'm not sure.
Somewhere.
No, they say they have a facility, but
undisclosed location.
It's not a dollar-for-dollar transaction. It's a certain percentage of the gold ETF, and it's a very small percentage. But
Andrew, $1,260, a couple of bucks short of that. When does it go up to $1,300?
Well, by the looks of things, pretty soon. But we're not really buying gold for a trade.
By the way, a steady climb, or you think it's?
If you look at the chart going back 5 years, the gold chart is a beautifully looking chart. It's a very steady,
straight, pretty much.
People talk about compare this to the 70s. It's very important to keep this into perspective. In the 1970s, the gold price went up from $35 an ounce in 1970, which was artificially low.
That's the point.
Maybe you could
Nixon separated that price in 1971.
Right. Immediately after they unhooked it, it went to $100 an ounce. So that was arguably where it should have been. But then it went from 100 to 800 in 1980, which is an eightfold increase. If you look at the chart there, that spikes up and then it comes back down. That 80 spike looks nothing like we've had over the last 5 or 6 years, where you see a very nice increase. And what's it all about? It's very simple. People understand that governments are fighting this current recession with the printing press. It's happening here. It's happening in Europe. It's happening everywhere. And people have lost faith in fiat currencies, and they're holding gold when they want to hold cash.
Phil Flynn, there was a terrific piece in the Wall Street Journal today by Alan Greenspan. I know he should talk. He's the guy who kept interest rates artificially low for so long, but he warns about the debt risks and says that eventually, we were talking about those long-term rates, he doesn't see them going up anytime soon, but he says once they do, they're going to spike just the way the price of gold has.
Absolutely, and I think he's right, and history bears him out, and he himself was in a point where interest rates were kept down too long and created this situation. But there is no doubt that there is going to be a price to be paid for all the economic stimulus that we're seeing here today. And if the economy survives this and we start to get better, then I do think that the price of gold is artificial in some ways. Now, I know Peter's going to take issue with me, but
it's Andrew, Peter's brother, but that's all right.
Andrew, I'm sorry, Andrew, sorry about that. Thank you, Andrew. Come on, let's go.
Well, hold on a second. Hold on a second, Phil, because let me throw that to Andrew. I remember the 70s. I remember when gold spiked like that, and we have a similar kind of pessimistic view. You and I agree 100% on the danger of government role in the economy. It's far too involved, not only here in the States, but everywhere in the world. And the more that happens, the worse off everybody's going to be. But once the government does pull back, and there is a voter revolt going on right now against big government, they may have success in November. They may have further success in the next presidential election. If government does pull back, isn't gold in danger of dropping down?
Well, yes, it is, but I don't see any evidence of any will to do that.
Well, have you heard about the Tea Party? Did you hear about Scott Brown? Did you hear about the elections that are coming up?
Well,
I mean, there's a lot of evidence.
You know, the minority party talks tough when they're not in power. When they come in power, they tend to change their tune.
That's true.
But, you know, there's a summit meeting in Toronto next week. Obama's going to try to convince the Germans to not pull back. The Germans had a front row seat to what happens with high debt, with Greece, and they're a little concerned. But Obama's going to talk them into continue to stimulate. But more importantly, people say, well, where's the inflation? You know, gold should be inflation. Where's our inflation? Well, the inflation's in China right now, and they're having problems with that because their workers are striking about the higher cost of living. And
that's absolutely, and that's going to add to inflation pressures. But Sandra, do traders, when they make their trades, actually take these political considerations into account, because it could affect the price of gold?
And the inflation conversation is one that consistently comes up because of the fact that, David, so many people are using it as a bearish argument, saying there's no inflation right now. Why would gold continue higher? That's the thing. Gold is where it is today without the inflation pricing built into gold. So what happens when all of a sudden we do start to see inflation be a problem? Then gold does have further to run. It will have further buying
Phil,
power.
I just got to finally ask you. They're asking me to wrap here, but China. Andrew's exactly right. In China now, they're striking for higher wages. If wage inflation comes into play here, all bets are off, right?
Absolutely. And I'll tell you this, we're talking, I agree that gold is still bullish. We're going to hit that 2,000 over the long run. But then after that, I think we're going to have a major correction. Markets go to all-time highs, back to all-time lows, back to all-time high. You don't want to be long when this thing finally tops out.
Phil Flynn, Andrew Schiff, and of course our own Sandra Smith. Great stuff, folks. Thanks very much. Well, there's a new kid in town taking control of the Gulf.